Hello, I'm David Elwood, Managing Director of the Mair Group. Today, Syndicates has invited me along to discuss investing in commercial property via investment trusts. The Mair Group was established over 30 years ago and is a West Australian owned and operated company. We have successfully developed 14 commercial properties and syndicates and trusts, and our average performance over the past 10 years has exceeded 15%. When investing in commercial property, there are a number of property structures available. This chart shows the volatility of the A-REIT market as compared to the direct property market and other unlisted wholesale funds. At Mair Group, we prefer to invest in the direct property market, which is much less volatile. This chart compares the asset class performance, again showing that direct property has outperformed the other investment classes over the past 8 years. Direct property returns is made up of the income return and capital return. This chart shows that the income return remains fairly steady over time, but the capital growth varies significantly. Overall, the Australian property market has performed at an average of about 9.4% return over the past 7 years. The returns that Mair Group have been able to achieve exceed this, and this chart shows the returns achieved by Mair Group as compared to the direct Australian property market. Again, our performance outshining those. I now wanted to talk briefly about the performance across various property sectors. This first chart shows the variance between office, retail, industrial and hotel investments. Again, showing strong yield for all sectors, but fairly weak capital growth over the last couple of years, although 2012 showed some strong returns for hotels. This chart shows the Sydney, Melbourne, Brisbane, Perth, Canberra returns for the CBD office markets. Again, showing that Perth has outperformed all other markets, with Canberra being the negative capital growth. The next chart looks at the retail property markets, again showing fairly strong yields with low capital growth. The bulky goods market turning into negative capital growth on an Australian-wide basis, but the data for Perth is more positive than this and is probably still in the positive. Finally, if we look at the performance across WA property sectors versus Australia, we show very strong performance on this chart of the industrial property market, reflecting an 18% return. If we now look at Perth industrial rents provided to us by Colliers, this chart shows some strong growth in the 2006-2007 period, which then fell back but is now starting to show some growth going forward. This is one of the reasons why we do favour the industrial sector. Another example or indicator of performance of industrial is the container movements at the Fremantle Port, which have almost doubled since the year 2003. I just thought now I'd show you a couple of examples of properties that we've purchased in the more recent times. We purchased the Bostic building in Welshpool. This building was purchased for its good yield, but also the fact that it was a multinational tenant and we expected the tenant to be there for long periods of time. We also purchased the 40 Winks Beacon Lighting building in Cannington. This property was purchased because of its location and also a perception that we would get some strong rent growth over the first 3 to 4 years. Other acquisitions were the Rock Australia building in Welshpool, again purchased because of its strong tenant and also prime location. One of the sectors that we have and we are seeking to make further acquisitions is the medical centre market. We currently own the medical centre in Cottesloe. This property was purchased for its long-term and secure leases. More recently, we purchased Midland Central Shopping Centre. Again, this property was purchased for its long leases to national tenants such as IGA and Dan Murphy's. Initially projecting a return of 8.25%, this property in fact was able to yield above 9% in the first year. Briefly now, just to look at current market trends. In the retail sector, we believe that there's some danger of falling rents and increased vacancies, so we would be very cautious if buying in this sector. The bulky goods shows some good strong yields, and for certain parts of Western Australia is showing some great opportunities, so it's really about buying in the right location. The office sector has been fairly steady over a period of time, with in fact some quite strong rent growth, so again we think this sector is worth looking at, but we would be careful that we don't buy properties that have been over-rented. Finally, the industrial sector. This sector has been fairly steady for a good period of time. Vacancies have started to appear in some of the smaller industrial properties. However, we believe that there's still some good buying in the larger sort of $5 million price bracket. Finally, when looking at some of the risks and challenges that are managed by the Mair Group when acquiring commercial property on your behalf. And then looking at the final slide, and now to just look at what sort of properties that are available in the current marketplace. A couple of properties that we have recently done some due diligence on: an office building in the West Perth area and a very well constructed quality warehouse in Wangara. Both properties offer reasonably good buying, and we are having a close look at these assets. I'd like now to introduce you to Natalie Egan, who's going to talk to you about our portfolio history over the past few years.
As David mentioned, Mair Group have managed 19 properties within 14 syndicates and trusts. And so what I'd like to do now is give you a little bit of an overview of the history of those properties under Mair's management. This chart is the same chart that you saw in David's presentation, showing the various asset class performances. But what we've done here is overlaid Mair Group's portfolio performance, or total performance, of all the property managers since June 2004. And you can see that Mair Group has outperformed not only the other asset classes, but also the industry average of direct property. In terms of the sectors of property under Mair Group's management, you can see that we are quite balanced with various sectors such as retail, industrial and commercial, but we do favour industrial with nearly half of the portfolio in that sector. As we've previously mentioned, the type of tenant that we have in our properties is critical to the performance of those properties, and you can see from the mix here that 60% of our tenants are national and ASX listed companies. What I'd like to do now is actually show you a breakdown of the individual properties and trusts that we manage, as opposed to just the aggregate of the performance. And you can see here that the performance of all those properties and trusts have almost doubled or quadrupled in the last 10 years. The performances do vary obviously between different trusts and portfolios, with Prindiville Drive being an outstanding performer. As David previously mentioned, the total performance of property is made up of income or distributions and capital growth. This chart shows you the growth in the distributions that Mair Group have made on the property that it has managed for over 5 years. So turning to capital growth, this chart shows you the capital growth experienced to date on the properties that we currently manage. Some of those properties, such as Midland Central Shopping Centre, has been only for a short-term period, just about to celebrate its 1-year anniversary, versus others that have been held for over 10 years. But you can see that the capital growth has been positive in all bar one trust. We think it's important for you to understand our investment philosophy and how we go about selecting the properties that we purchase for investment. And so these bullet points actually give you a sense of what we look for. It is important that the tenants are of good quality and that the lease covenants are strong and that there is growth opportunities with the market rents in those leases. We do target initial distributions to our investors of 8% plus, and as you can see from the history, those distributions do grow when compared to your initial capital over time. We are looking for established and properly zoned commercial locations that are recognised, and we do look for flexibility in the property layout to give us choice with regard to future releasing. We think that it's our investment philosophy that actually sets Mair Group apart from its competitors and peers, and it's our investment philosophy that drives the decision-making process when purchasing the properties that we purchase. Our approach is conservative, and we do stick to our philosophy each and every time, and you can see through the bullet points listed here what that philosophy entails. One of the strongest areas that we focus on is the quality of the tenant and the strength of the lease covenants, and this has assisted us to achieve the higher than average returns that you've seen throughout this presentation. We extend that to the mortgage gearing level that we adopt. 50% is our maximum, and this allows for prudent risk management, and this protects investors from downside risk should interest rates increase. So what makes Mair Group different? Aside from the philosophy that we've just spoken about, it is the comprehensive nature and expertise in selecting the properties that we select. In doing this, we also assist and ensure that the sales contract negotiations are done correctly and that we are purchasing properties at the right price and under the right conditions. We obviously have the resources and skill to analyse and assess the market trends and the drivers to make these commercial decisions, and our people are well experienced in the acquisition, management and disposal of commercial property and operating unlisted property funds. So in summary, Mair Group has offered a history of internal rates of return above 15% across the aggregate of the portfolio it manages. We do specialise in the property selection process, and in particular WA-based properties. The distributions that we have continuously paid out to our investors have ranged from 7% to 12% plus. We adopt the conservative gearing approach. We are obviously a professional management organisation, and we deliver the required statements and reports to our investors each and every year. Very quickly now, I'd like to just touch on an investment opportunity that we have that is now available. MPF Property Trust number 1 was established in 2011. It currently holds 2 properties, and we're looking to raise capital for a third. The 2 properties in the trust at this point in time are 12 Thorpe Close Welshpool, an industrial property purchased in September 2011. It has actually had a revaluation done in January of this year, and that revaluation showed a 7.3% growth in that property value over that period of time. The second property is 11 Excellence Drive in Wangara. That property was recently purchased in December 2012. Also has strong leasing covenants and good rent reviews, and is contributing well to the overall distributions of the trust. The distributions of the trust are shown in this slide since its inception to the last distribution made on the 31st of March at 8.25%. We are looking to acquire a third and final property with similar characteristics to the 2 industrial properties already held within the trust, and maintaining or improving upon the distribution rate of 8% plus. If you are interested in this opportunity, we do have documents available to give you more information to make an informed investment decision. These documents are available by clicking the button below. Thank you.